what happened yesterday? Part of the recap. Yellen was slightly dovish. She said that financial conditions can slow rate hikes. This was the signal that there will be sort of cemented a no hike in March. Okay, she did explain how commodities, their slump means less demand for U.S. exports, but she still was careful, saying that it's unclear if this volatility is temporary or lasting. She did mention the strength of the U.S. dollar, and now we're seeing it weakening. And she did comment about negative rates in an answer to a question that also spurred some speculation that the Fed will go negative, but I think it was only very, very theoretical. Okay. Other things we had yesterday, talked about them. Okay, today we have jobless claims at 1:30 GMT. Shouldn't have much of an impact. This figure has been climbing up, not so positive, but has less of an impact. Yellen speaks again. In theory, this should be less interesting than yesterday's appearance because it's only Q&A and she dodges hard questions. But given the recent falls in markets and perhaps maybe more intelligent questions from politicians in the US, maybe we'll have more action. But I must say that even if she doesn't say anything, markets will interpret it one way or another or think about what she didn't say. So I'm sure we'll have lots of action. Other things to watch: RBA's Stevens talks at 10:30, and German GDP before the show tomorrow morning at 7, expecting more of the same, 0.3 quarter over quarter. Okay, let's take another look at charts and then head off. This is just before we look at the chart, just to show you once again, no rate hikes are expected. Basically, only 20% of rate hike expected in February 2017, a year from now. And for March, 0, the absolute 0. Okay. So according to bond markets are more dovish than the Fed. Okay. One more look at markets. So far, the breach of euro dollar above 113.40 has been a false one, but we often have a first move which is false and then another move. I'm not sure what's going on, if this is what we'll see. And dollar yen did stabilize, well, for now, 111.30. This is still a huge fall, nearly 2% on dollar yen. And of course, yen crosses like pound yen, which we mentioned before, reached low of 160.07, round number of 160, so it works as support. We're already 70 pips above it. Wild days in pound yen. Okay, it's not market expectations, it's the algos. Yeah, it could be also the algos exaggerating to some kind of headlines. Let's see if I can find something interesting for you that moved markets now, or just, I believe it's just Europe Open that, yeah, we had, we had European stocks opening lower. Of course, move to sort of a continuation of Asian stocks, and fresh European traders came to their desks and sold off assets, sold off risk, but havens, safe havens like the euro and the yen. Okay, so that's it for today. Really, today we had a really live market open because we had extreme moves already during the show. Be careful out there, volatility is much higher. I wish everybody a safe and successful trading day. And see you tomorrow. We'll see if Yellen moves the markets once again, if things stabilize. And tomorrow we also have big events to close the week.